Dr. Janet, thank you for your time today. So we're doing a series on the future of finance, and I think one of the key aspects of that as we move forward into the future and even the present day is how anti-money laundering fits into the electronic money that we move around. So could you give me a little bit of an idea of what happens in your world of anti-money laundering?
Absolutely. So anytime there's criminal activity and funds are generated, there's a need for that money to look like it's legitimate. That's the basis of money laundering. It's sort of like hiding the proceeds of crime so that someone can then spend that money on cars, houses, whatever they want to spend it on. So the people that do this are trying to hide that trail. They're trying to change that money. Now, before we all went very, very digital, that involved just sort of like cash transactions, maybe changing what currency things were in and moving it around that way, because it's very, very hard to trace. But now the majority of transactions, like particularly in the UK, are coming online. It makes it harder because you have that digital trail, but not impossible. And there are lots of gaps where information gets lost, where it's very hard to trace the true origins, particularly with all of the data privacy laws that we have in the UK and worldwide. Really getting to the bottom of where has that money come from and is it legitimate is very difficult. So one of the things that me and my team do is we're looking at different typologies. So these are the different methods that money launderers use in order to hide and obfuscate criminal proceeds. And those sort of patterns, and can we pick up that unusual activity so that the banks and the financial institutions can really look into those transactions and then make that final determination as to whether it's something legitimate or not.
So when you say final determination, how does that work at the moment? Is that human, or is that a machine that makes that determination?
At the moment, that very final step is human. So they will have loads of algorithms in place. So there'll be a whole set of standard deterministic rules-based heuristics to look for odd transactions or odd behaviors. There'll be a layer of sort of machine learning processes that will adapt based on those behaviors. And there'll be some overarching workflows, some of which may be automated, some of which may be fully human, that will end up at a point where someone will make a decision as to whether that account and certain transactions within it need to be raised as something that the authorities then need to take further action on. And the financial institutions themselves can also make a determination to maybe block accounts if they think that's appropriate as well. But while there is some automation, the higher the risk, the more you need to have that human in the loop to make sure that everything in the process has been properly checked and that's been properly documented before you hit stop on something. Because one of the big problems that we have in our industry is a lot of the typologies connected with money laundering really, really overlap with the things that you see in accounts of some of the most marginalized in society. So if you think of people with like 5 or 6 0 hours contracts, people who are very cash based, and their money in, money out is equivalent, and they just don't have the savings. But you see in their accounts this rapid exchange of money. You see odd amounts coming in at odd times, and it's those sorts of things that can flag up automatically. And the last thing a financial institution wants to do is block accounts of people like that, because it really has a big material impact on them. So as a result, you tend to have that human oversight rather than automatically stopping everything.
Yeah, I think probably anybody who's listening to this will have seen that, won't they? They'll have gone to do an online payment. Even if you've got the push notification on your phone and you prove it's you, they still often get blocked, and it can be really frustrating.
Yeah, it can be, and I know a lot of banks really try and, they want to try and protect their users as much as possible, but they're balancing that against that level of frustration. Because you're right, if it gets stopped, you don't mind if you get that quick text message and go, yes, this is me. And particularly for the bigger purchases, you might get the phone call to go through things. But by the same token, if something went out of your account that you didn't want. I mean, this is more the fraud side than the money laundering, but you'd still want you want to be reimbursed. And one of the great problems with a lot of financial crime is if you lose money through fraud and you're reimbursed, that's not your money coming back. The criminal still has your money. It's someone else's money that you're getting back. So we all have a duty to try and stop this as much as we can.
Mm-hmm. Yeah, that makes perfect sense.